Do you know the holy grail of investing? A stock that delivers consistent cash while holding its value for decades? That's the dream of every income investor, and someone who's mastered this art is none other than Warren Buffett. He's built a fortune by identifying companies that tick all the right boxes: strong brands, reliable profits, and, you guessed it, juicy dividends. Today, we'll dive into Buffett's world and explore some of his favorite buy and hold forever dividend stocks, helping you potentially build your own wealth machine. Number 1. Bank of America, BAC. Warren Buffett, the famed investor, prefers firms with good fundamentals and dividend history for long-term investments. He happily has Bank of America, BAC, as his second largest position for a good cause. Let's examine why income-oriented investors like BAC. A 3.3% dividend yield is offered by BAC. For every BAC stock you hold, you earn 3.3% of its share price annually as a dividend. This generates a constant income that may be invested for development or utilized to enhance your lifestyle. More noteworthy is BAC's commitment to dividend growth. The 2008 financial crisis forced the bank to decrease its payout drastically. However, since then, they've been on a constant road to growing it. This reflects the bank's financial strength and its commitment to repaying shareholders. While previous performance doesn't guarantee future outcomes, looking at BAC's historical price chart gives some perspective. The stock price has varied dramatically throughout the years. For example, in February 2022, it achieved an all-time high of $46.47. However, it has also had moments of decline, with a 52-week low of $24.96. Despite the swings, BAC has long-term promise for dividend growth investors. The bank works in a critical area, the financial industry, and is prepared to gain from a developing economy. Number 2. Chevron, CVX, a dividend giant with staying power. Chevron, CVX, is a powerhouse in the oil industry, luring investors with a substantial dividend yield of 3.89%. But CVX's appeal extends beyond merely the present dividend. The firm enjoys a lengthy and steady track record of rising dividends, making it a favorite for income-focused investors seeking solid returns. Looking at Chevron's previous performance, the picture appears good. While the stock price varies, it has shown an overall increasing tendency over the long term. Currently, the stock rests at $159.08, just below its 52-week high of $172.88. However, this is still much better than the 52-week low of $139.62, displaying its durability. Chevron's lengthy history also indicates a dedication to compensating shareholders. The firm has grown its dividend for 35 consecutive years, establishing its image as a dividend aristocrat. This constancy creates a feeling of confidence for investors wanting a consistent revenue source. Financial strength is another component strengthening Chevron's attractiveness. The firm enjoys a robust balance sheet, enabling it to smoothly handle market changes and sustain its dividend distributions. Chevron makes a strong argument for long-term investors. Its substantial dividend yield, history of growth, and financial stability make it a potentially attractive addition to a buy-and-hold portfolio focused on income production. However, it's vital to realize that previous performance is not necessarily indicative of future outcomes, and investors should do their own research before making any investment choices. If you're getting inspired and informed, hit that subscribe button. Number 3. CocaCola KO. CocaCola KO is a behemoth in the consumer staples industry, recognized for its popular beverage and remarkable track record of dividend increases. For income-oriented investors seeking a solid long-term hold, KO provides a tempting opportunity. Dividend strength. Boasting over 50 consecutive years of dividend increases, Coca-Cola is a dividend aristocrat, a distinction reserved for firms within the S&P 500 that have accomplished this achievement. This focus on shareholder returns is a characteristic of Warren Buffett's investing strategy. Currently, the dividend yield remains at 3%, offering a continuous source of income. Looking beyond dividends, Coca-Cola's stock price has shown continuous growth over the long run. While the current price is below its all-time high of April 2022, KO has traditionally outperformed the larger market. Macro Trends data reveals an average yearly growth rate of over 6% in recent years. This resilience reflects the company's capacity to traverse economic cycles and produce value for shareholders. Combining these considerations, Coca-Cola emerges as a solid contender for a buy-and-hold strategy. This overwhelming name awareness, regular dividend increases, and historical performance make it a potentially useful addition to any long-term income strategy. Number 4, American Express, AMX, a dividend stalwart for long-term investors. AMX enjoys a remarkable 30-year track record of growing dividends, establishing its status as a dividend aristocrat. This constancy indicates a company's financial health and its determination to deliver value to shareholders. While the present dividend yield of 1.77% could appear lower compared to other choices, it's vital to evaluate the long-term growth potential. Looking back, AMX has given remarkable returns for investors that hold for the long term. Over the previous decade, the stock price has climbed dramatically, exceeding the larger market in various instances. This price rise, along with the regular stream of dividend increases, demonstrates the potential for wealth growth via long-term ownership. Including AMX in his portfolio says volumes about Buffett's faith in the company's ability to produce consistent profitability and sustain its commitment to dividend increases. While the present yield may be lower, the potential for long-term capital gains combined with growing dividends makes AMX an interesting alternative for investors seeking a solid dividend provider. Number 5, Kraft Heinz, KHC, a high-yield dividend pick with a checkered past. Kraft Heinz, a firm on Warren Buffett's radar, provides an attractive dividend yield of 4.8%. This dividend corresponds to a major part of your investment, returning cash to you every year. However, it's vital to analyze Kraft Heinz' previous performance before plunging in. While Kraft Heinz has legendary trademarks like Heinz Ketchup, Oscar Mayer, and Jell-O, its stock price hasn't exactly been a prescription for success. Since its merger in 2015, the stock price has undergone tremendous volatility, failing to keep pace with the larger market. This raises worries about possible capital appreciation with the attractive dividend. Buffett's perspective frequently emphasizes firms with great brand awareness and stable profitability. Here's where Kraft Heinz' narrative becomes fascinating. The corporation has had issues in recent years with financial loads and difficulty adapting to changing customer tastes. However, they've made moves to solve these concerns, concentrating on cost-cutting and brand rejuvenation. So, is Kraft Heinz a permanent hold? While the hefty income is obviously attractive, prospective investors should carefully analyze the company's previous performance and future prospects. Further investigation of Kraft Heinz' debt condition, brand initiatives, and general financial health is vital before choosing whether it corresponds with your long-term investing objectives. Number 6, IBM. While Warren Buffett isn't renowned for pursuing big yields, IBM stands out in his portfolio for its mix of stable dividends and a history of good financial success. Currently, IBM has a yield of roughly 3.48%, making it an interesting alternative for income-focused investors. But IBM's appeal extends beyond merely its present dividend. The firm has a drastic track record of growing dividends for 28 straight years, establishing its image as a dividend aristocrat. Looking back, IBM's historical performance has been inconsistent. The corporation was once a strong force in the IT sector, but has had difficulty in recent years adjusting to the development of cloud computing and mobile technology. Despite these difficulties, IBM's stock price has shown a largely rising trend over the long term, with rare times of turbulence. For investors seeking a consistent dividend provider with a long history, IBM provides an attractive opportunity. However, it's crucial to realize the company's need to manage a shifting technology environment to guarantee continuous development and shareholder value. Number 7, Verizon, VZ. Verizon, VZ, stands out as one of the companies chosen by Warren Buffett for its great mix of income and durability. Known for its dependable cellular network, Verizon has a large dividend yield of 4.5%, making it an appealing investment for income-oriented investors. But Verizon's attractiveness extends beyond merely profits. The corporation is financially robust, having a stable track record of profitability. Looking back, Verizon has a history of raising its dividend distributions for over 15 years, displaying a commitment to rewarding shareholders. Verizon isn't resting on its laurels. The corporation is currently investing in building its 5G network, a critical technology for the future of mobile communication. This strategic decision prepares Verizon to capitalize on the expanding demand for high-speed internet and preserve its competitive advantage. While previous performance isn't a guarantee of future outcomes, Verizon's historical track record of financial soundness, dividend growth, and strategic investment indicates it might be a great long-term holding for investors seeking a steady dividend payer. However, it's vital to note that all investments contain some amount of risk, and more study is required before making any financial choices. While these are all strong companies favored by Warren Buffett, the best dividend stock depends on your individual goals. consider your risk tolerance, desired income level, and long-term investment horizon. For more in-depth dives into dividend investing and stock analysis, be sure to like and subscribe. We'll explore more investment strategies and help you navigate the exciting world of dividend stocks. Thanks for watching.